Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Hedera and its token HBAR. None of the content is financial advice. Hedera and its token HBAR are featuring on this narrative word cloud on the Crypto Weeklies website. That means have been some narratives related to Hedera which caught the headlines in terms of social media outlets such as YouTube and X. This is the last 7 days worth of activity on the crypto related accounts on social media platform. This is scraped using machine learning algorithms to look for themes which are garnering some attention in the market. Again, Hedera being one of them, and we have covered the others on the YouTube channel such as Chainlink as well as Bitcoin, XRP. So today we are going to cover HBAR, and tomorrow probably Cardano and its token area. So if you would like to stick around to again, not financial advice, to ascertain what is a machine learning based price forecast for these assets, you can give us a like and subscribe. So let's get started with Hedera and its first of all its current price action. It's at around 14 cents, ranked number 21st by market cap rankings. Circulating supply about 42 billion, total supply and max supply around 50 billion. So more than 80% of the max supply is in circulation. That means going forward, impact of any token unlocks should be minimal. If we look at the HBAR's technical level, the price action is still lower than the 20-week simple moving average and the 21-week exponential moving average, both coming in at around 17.5 cent level. So that is one key level to watch. If there is a breakout over here first, needs to test or go beyond the 0.236 fib level at around 16 cents, and then potentially contend with the 20-week resistances at around 17 cents. So now the price action slightly under 15 cents. If we look at the price action with respect to the machine learning based model, again, this is the homepage of the Crypto Weeklies website. All available for free. You don't have to pay or sign up for it. If we look at the machine learning based outlook in the next 6 months, if there is a non-euphoria bull run, that is a 68th percentile bull case, one standard deviation bull case in the next 6 months, the price forecasted in that environment by the AI model is between 16 cents to about 52 cents. That would be slightly higher than the 2021 weekly average of the of that all-time high week at around 44 cents. But the previous all-time high, again, or if you look at the weekly max point or the weekly high for that week, was at around 57 cents. So again, although this time around the weekly average highs are predicted at around 52 cents, the eventual top in that week could be somewhat higher than that, somewhere between 55 and 65 cents. That's just an interpretation of the model. If we look at the 2 standard deviation, that is with euphoria in the altcoin in the next 6 months, in the altcoin market in the next 6 months, towards the end of the year 2025, at least till the end of November of 2025. If we look at HBAR in that environment, the price forecasted is between 19 and 19.3 cents and $1.73. $1.73 HBAR is considered in a 2 standard deviation or 95% confidence that the ceiling price is within this bounds of the orange line, that is between 19 cents and $1.73. Again, and week by week ceilings are different. So for this week, 19 cents is the 2 standard deviation ceiling. Let's say towards the end of August of 2025, the ceiling is at around 61 cents. Towards the end of November, it's at around $1.73. So that's how it goes in terms of the bull case. In the case that there is a one standard deviation bear case in the next 6 months, where the assets decline with time in the next 6 months, if the market throws that kind of scenario, the forecast is in between 6.5 cents and about 12.5 cents. Again, the purpose of this model is not to tell if the prices have to go up or down. The purpose is to, again, that is solely determined by market forces. The purpose is to identify what is a 1 standard deviation ceiling. If there is a bull case, or 2 standard deviation, or a euphoria case, or in a bear case, and again, at least have some idea of what the market could throw if there is an upswing and a downswing, and again, using historical data and machine learning based price forecast models such as seasonal, ARIMA, LSTM, and XGBoost. Those are the governing principles behind this machine learning based price forecast. Again, not financial advice. So if we look at the regression based fair value for HBAR, currently comes at around the fair value comes the fair value is established by this pink line, which is a polynomial regression based output of what is considered as undervalued phase and overvalued phase. Anything above the pink line is even in the bull market and in the bear market considered overvaluation phase, whereas if you apply one standard deviation residual to the downside, which this green line notes, beyond this green line is a deep undervaluation territory, like this model discovered back in June 2022, then also October 2024, and now potentially since June 2025. That HBAR is once again coming in that accumulation territory, again deep accumulation territory value zone, if you would like to call it, per the interpretation of this model. The one standard deviation residual to the downside is currently around 21 cents. So anything below 21 cents at this phase of the market cycle is considered as sufficiently undervalued for HBAR. The opposite of that one standard deviation residual to the downside is this one standard deviation residual to the upside, the yellow line. Together, the yellow and the green line, price action stays about 68% of the time. With any deviation outside this bounds, again gets back to the mean reversion to the upside as well as to the downside. That means if the prices break out to the upside and go beyond this yellow line, there is a 68% chance that they come back in. Similarly, to the downside, if they break outside this green line, there is a 68% chance that they go back up. Right now, if we focus on the one standard deviation ceiling, is coming close to that 70 cents target. That price forecast was for end of August 2025. That's the one standard deviation ceiling per the regression model as well. The two standard deviation ceiling, that's where major the two standard deviation residual applied to the fair value, that's where major peaks have occurred for HBAR. This time around they have come in, those two standard deviation ceiling was breached in for a brief while in late December 2024, when the price grew from that 5 cents territory to about a 6x in a matter of few weeks, to all the way to about 33 cents. Now the two standard deviation ceiling is coming close to that $1.21, kind of close to that two standard deviation machine learning based price forecast at around $1.73. Again, if you extrapolate that to 3 to 6 months into the future, there is a good chance that the two standard deviation ceiling is at around $1.73, whereas one standard deviation ceiling is close to that $1 target. So in terms of the current accumulation related DCA model for HBAR, helps identify the price and the risk in one chart. This is the price color coded with risk levels. This is how much the price has deviated from the regression based fair value. If the deviations are severe per this model, again you can see whenever the risk levels identified were less than 20%, again at least avoiding some of the blow off top phases in the market, as it did till throughout the asset's life cycle. Right now it's coming at around 1% risk. If the risk levels are somewhere between 30% and 40%, that's the intermediate peak zone for the some of the bullish rallies. The price forecasted in that environment is between 44 cents and 55 cents for HBAR. That's a conservative estimate of what the price could do. That is about a 3x from the current price of about 15 cents, slightly under 15 cents. 45 cents to 55 cents, between 55 cents and 45 cents and 55 cents. That's about a 3x and slightly higher than that the current price of HBAR. In terms of the SMA model, which is the 20-week simple moving average price based model, how is the price doing with respect to the 20 weeks SMA? Currently risk levels are at around 16%, or the second best time to DCA for the model. If we get rid of some of the overvalued phases for this model, again this model in terms of the outlook, it looks only 20 weeks into the future. Again you can see DCing at this levels would have been detrimental, as the price had more room to go to the downside. Again, that's why no model is perfect, but at least helps tune out some of the noise, especially when it comes to less than 20% risk. There are some false positives with this model, but nonetheless, at least they help avoid DCAing in the blow off top or any overvalued phase of the market cycle. If for this interpretation of this model, as the risk levels go above the 30% and 40%, let's say between 30% and 50%, or 0.3 and 0.5, that's when the short term peak estimation becomes more useful. Per this exercise, between 30% and 50%, the price action could be somewhere between 28 cents and 35 cents. So this is slightly more conservative, still about between 2x and 2.5x of the current price of about 14 cents. It's forecasted using the SMA model. At the end, we'll cover a composite forecast of all of the models. The time weighted average price helps identify an accumulation zone when the price is below this blue line, which is the time weighted average price. If the underlying asset with the hypothesis that has some adoption and a chance to participate in the next potential bull run for the asset class, accumulating below the blue line is historically speaking has not been the worst idea. This model did identify an accumulation zone from that 14 cent target in May 2022 till about this October 2024, with a few exception over here at around 10 cents. Right now the time weighted average price comes at around 12 cents, roughly speaking 12 cents. This model would be key to look out for in mid to late 2026, during that bear market year for major cryptos, where if and when the price goes below the blue line at that point in time, that could signal in an accumulation phase for the next bear market. Right now the risk levels are fairly less. Again, you can see that accumulation risk is per the time weighted average price is at only 22%, as the price has gained some proximity to the time weighted average price. Overall, the estimated bull run target for HBAR with the composite 3 risk based model, the time weighted average price, the SMA model, and the so now coming to the estimated bull run target using the confluence of the 3 models discussed, the weighted risk is at around 11% for HBAR. Estimated bull run target is at around $1.25. That is with the hypothesis that at the mania phase, the weighted risk goes somewhere close to that 95% risk or 0.95 risk. And that with that hypothesis, the estimated bull run target with the risk reward based approach, again not machine learning, is about an 8.5x reward from the current price of about 15 cents. And with that, I would like to conclude the video first by saying the $1.73 is the upper bound, $1.25 is kind of middle of the road, and 52 cents to 75 cents is the conservative estimate for HBAR's price forecast in the remainder of the year 2025. And with hope you enjoyed the content, and if you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.